to Congresswoman Maloney from New York.
Thank you very much, and thank you for calling this hearing. I would like to ask Mr. Brady to respond to a statement from really Alan Blinder and Mark Zandi in their paper of 2010. They argued that the Federal Reserve's actions in the area of monetary policy during the economic crisis were more powerful and effective than anything that Congress did fiscally through the stimulus. And I would argue that the Fed's pursuit of the dual mandate contributed to avoiding an all-out economic collapse and helped fuel our economy. So I'd specifically like to ask my colleague, can you cite any example of how the dual mandate in any way hindered the recovery? Most economists believe that it was helpful in the recovery.
I think there are a couple key issues here. One, the Fed's actions in the mid-2000s, keeping interest rates too low for long, helped bring about the crisis that they later intervened in. Secondly, I do think—
But that happened during Greenspan's days.
We're talking the Fed as it is today and its actions over the last 4 decades, truly. Secondly, I think the Fed—
But we're discussing it just because I want to make sure you're answering the question. And on this point, if I could make it clear, what we're looking at now is the recovery, the actions that took place by Bernanke and others in response, and what would have, and you were saying the interest rates were too low, would keeping interest rates high to avoid inflation have been a sensible policy during the crisis when we were looking for recovery in 2008 and 2009. That's the time that we're looking at, how the dual mandate responded to the economic crisis, and I would argue that it was helpful. But my question specifically—
I actually wanted to give you a yes to your answer.
Oh, really?
During the financial crisis, even though the Fed, frankly, helped fuel it, some of their actions they took during the financial crisis truly did calm those waters. But stop there and look at the economic recovery since. In my view, pursuing the dual mandate, in some ways for the first time identifying it as a way to not only intervene, for example, in the housing market, and then continuing to intervene as well rather than allowing exiting that market, continuing to allocate credit around the United States, creating this uncertainty on what will the Fed do next has actually, in my view, hindered the recovery. So if you look at 3 points, did they help fuel the financial crisis? Yes. Were they helpful during it? Yes. From recovery on, in truth, no. In my view, we're not at the job levels we should be, in part because it's Congress's role to set the fiscal policy to create the business climate so recovery can occur.
Well, if the Fed had been constrained because they did not have the dual mandate in moderating inflation only, and would the recovery be what we are experiencing now? They were able to keep if all they had to do was look at inflation, they would have been raising interest rates. You know, they lowered them in 2008 and 9, which is very important because they had the dual mandate. And if they were constrained and to moderating only inflation, if that was the only thing they could have looked at, then they wouldn't have been lowering the rates. Having the dual mandate, most economists are arguing, gave them the flexibility to react quickly to the marketplace. I would also like to hear from the ranking member, Mr. Frank.
At some point, I would like to respond to that because I think I can shed a little light on it.
Well, first, I want to talk about